and December down 6 3/4, 636 3/4. Finally, cotton market is higher, up 28 on the March, 67.89. New crop 69.76, up 26. Let's go to Chicago. Blue Line Futures. Oliver Slope. Oliver, what are you watching here?
Everything is just flying around here to start the week, which is nice to see. It's better than watching paint dry like we got used to at the end of last year. And I think that's really what the markets, not just the agricultural markets, but the broad markets in general, are just getting used to, is that we're going to get these headlines on a daily basis. And from a position manager standpoint, you're going to want to try to mitigate some of that risk ahead of the weekend, especially in the agricultural markets, because right now we're not just focused on weather forecasts over the weekend. We're focusing on tariff talk and things of that nature, which can come and go in the matter of hours, apparently, these days. So there's a lot of headline risk out there, a lot of volatility. I think that sets up for opportunity. But with that headline risk, it's very, very unpredictable. So from a marketing and a hedging standpoint, you're going to probably want to be pretty proactive on rallies, which we've seen here in corn as of late. I still think there's probably a little bit more upside left. We're still marching up and to the right, which is good on the technical standpoint. We have run into a little bit of chart resistance, and I think we're seeing a little bit of a healthy correction. But so long as 473 to 475 could hold in that March contract, I think the bulls are still in fairly decent shape here as we look to round out the month.
I look at where we've been over the week, where we've been over the month, and then year over year. Corn prior to last week had been performing positively on all three of those, but last week actually ended up turning down 1% week over week. But you look over at beans, we saw some good gains from beans last week. Is there potential for this week to turn around?
I think there's still potential for beans. We've seen the money managers and managed money show an appetite to be long some of these agricultural commodities. You've definitely seen it in the livestock markets, which I'm sure we'll get to in the next segment. Live cattle, feeder cattle, lean hogs, all basically record net long there. And you're seeing them really push the pedal to the metal here in the corn market, and they're just dipping their toes into the long side in soybeans. So if we do get a few different catalysts to propel this market higher, I think there's room to run. And I think those catalysts would likely come from better trade relationships with China, increasing demand, and potential weather disruptions down in South America. I think all three of those things could potentially provide soybeans a nice little tailwind. Without those coming to life, there's probably some downside risk.
Well, if we're going to put the pedal to the metal, we're eastbound and down, so we'll take a break and we'll be back in just a moment. No Smokey and the Bandit here. That's a reference to an old movie. But we'll come back and we'll talk livestock futures with Oliver. Market Day Report continues after this. The cattle market front month at 82.55, up a quarter, and $1.57 higher on the April, 89.77. Oliver Slopes with Blue Line Futures. What's happening here?
Well, we had a fairly friendly cattle on feed report. I think that's just added some powder to the keg, so to speak. And we're seeing some follow through following last week's strong up week in live cattle and feeder cattle. The fundamentals remain strong, and the cattle on feed report has kind of increased that appetite for the funds to be long. And as mentioned in the grain segment, they're record net long. Live cattle, we would assume, feeder cattle, and pretty darn close to it in lean hogs. They've reduced some recently, but the cattle complex has really been where all the attention's at. And I think, what you're starting to see with this sharp move higher is some pressure on the hedgers. They're getting squeezed out of the hedges because they're tired of putting margin in, so they're getting out of short futures, maybe replacing that with put options. And it's really just reminds me of 2014, 2015, that last historic bull run that we had in the cattle market, where that's when we started to really see the top come into play, is when you squeeze the last shorts out of the market, CME Group raised margins, and then that's when we came back to earth a little bit. So the fundamentals are strong, don't get me wrong, but it seems like we've gone a little bit too far, too fast here in the short term.
Okay, speaking of markets moving up, we've got one that's moving down right now. This is the crude oil market, which week over week is down 4.4%, but it just was a few weeks ago we were talking about $80 oil. Look at that, 73.62. What are you watching in the energies?
The energy is still halfway friendly longer term. I think we could see a little bit more of a pullback in the crude oil market. And if you look at the broad markets, generally speaking, we're just seeing a risk-off trade. You look in the equity markets, we saw the NASDAQ as much as 5% lower overnight, the S&P down 3%, gold down about $40. So a lot of pressure in the outside markets. Ultimately, I think some of these will set up for buying opportunities when the dust settles.
All right. Oliver, always great to see you. Thanks for the insight. Oliver Slope, Blue Line Futures. And